Hi folks, and welcome back to Meaningful Money. Okay, I'm here at Wheel Jane Solar Farm, just outside Truro. It's not exactly a very sunny day, but that doesn't matter, I'm told. Come back to that in a minute. I've never been anywhere quite like this before. In a sense, it's not that scenic, but if you imagine, you can see how big this is. If I was to sort of run a bit nearer to it, you can see just how massive it is. Well, there's just hundreds of these. This is a 2.9 hectare site, just an enormous field, a disused tin mine, full of these things. I'm here at the invitation of Octopus Investments, who are, as the name cunningly suggests, an investment company. And people who invest with Octopus can, through their schemes, invest in things like this. So I'm here to talk about solar investing. So as ever, before I get into the detail, I must thank my friends at 7 Investment Management down here who sponsor Meaningful Money. But this particular episode is also sponsored by Octopus, so I'm grateful to them too. So solar investing, it's either panels on your roof or slightly larger scale like this. So why should you do it? The primary reason is something called the feed-in tariff, which simply means that if you've got one of these on your roof, you get free electricity from it, and anything you don't use, any excess that you produce from your panel which you don't use can be fed into the national grid and you get paid for it. Not only do you get paid for it, but the government has guaranteed that the income from the feed-in tariff will be linked to inflation for the next 25 years. So that's pretty well worthwhile, I'd say. Pretty much for doing nothing. There's an initial investment, of course, in putting the things on your roof, but after that, you just watch the money come in. So, I mean, this is just a massive site. 2.9 hectares, as I say. There's 5,700 panels. I imagine one of these little sort of rectangles is a panel. 5,700 of these on this site. Enough to power 430 homes for a year. I'm told it's 1.4 megawatt hours per annum. But 767 tons of CO2 saved every year. This is about as eco-friendly as you can get, because even at the end of the 25-year term, all you've got to do is pull up some of these stakes and take the things away, and you've got a 25-year a field left fallow for 25 years. So it's very ecologically friendly. So this income that you get, this feed-in tariff, that's pretty cool, as we've talked about. But investments generally, very often you can kind of value them. One of the ways you can value investments is by the income that they produce. So for example, if you own a share in a company, sometimes those shares are given something called a price-earnings ratio. It's just a sum which is done to value a share simply by dividing its earnings into its price, so that's the dividends on it, into the price of the share, just to see whether that share is good value at the moment based on the income it's producing. And so if you can imagine, if this is an investment which produces an income which you know is going to increase by inflation over the next 25 years, it has a value as an investment, I would say. It's going to be a non-volatile investment because you know what the income is going to be, unlike dividends on a share, which can be withdrawn at any time. So, this is a pretty non-volatile, we imagine, predictable kind of investment. But better than all that is its tax efficiency, and particularly on this kind of scale. Because solar farms such like this can be held in venture capital trusts and enterprise investment schemes. Now, for more detail on those, you're going to need to look back to episodes 116 and 117. I'll put a little link up here so you can go straight to them. But there's some serious tax benefits for investing in this way. So you've got, for example, tax relief at 30%, which means effectively 30% of your investment is paid by the government. It's very simplistic, but it'll serve. Any profits you make on the investment are free of capital gains tax when you sell eventually. If you've made profit on a previous investment and when you've sold it, but you don't want to pay the capital gains tax now, you can roll over the profits into this investment and defer your capital gains tax, which is useful for planning. And that's, I should say, only in enterprise investment schemes, but also only in EISs. Any investment that you hold in an EIS, if you hold it for 2 years and you still hold it at the point of death, then it's inheritance tax free, 2 years and not the usual 7 years. I'm going to go into more detail on that next time. So you know, there's serious advantages in investing in this way. Remember, the solar thing is one, but the serious tax advantages are gained by wrapping this sort of thing in an EIS or a VCT. So all sorts of advantages to solar investing, particularly on this scale, but even just by putting one of these on your roof, because you're going to benefit from that feed-in tariff, a kind of passive income. But you must hurry and buy while stocks last, because there's some changes happening next year, announced in the budget, that as of April next year, you will no longer be able to do one of these in an EIS or a VCT. That sort of little benefit is being closed off in these times of austerity. But even if you're just thinking of putting one of these on your roof, it's probably better to do it before April 2012, because the word is that the level of that feed-in tariff is going to be reduced as of next April 2012. So all kinds of benefits to investing in something like this. This is, if you like, an addendum to our sort of portfolio constituents series that we did ages ago, and we talked about gold and commodities and corporate bonds and gilts and shares and all those things, and that's back in the episodes 30s and 40s, really a long time ago. So this is just another thing you can invest in, but using these schemes like VCTs and EISs, it can be incredibly tax efficient as well. So that's enough of that, I think, and from Wheel Jane, at least for this one. I'm actually going to stay here and do one more. So thanks again to Octopus for letting me on the site and talk about solar energy. I'm going to put a link to Octopus underneath the video so that you can click through to them and see exactly what this is all about. As ever, leave any questions under the video. I'll do my best to answer them. Thanks very much for watching, and I'll see you back here for the next one, when I'm going to talk about business property relief and the inheritance tax advantages of that. See you next time.